G'day legends, welcome back to the Gold Jumper channel for an absolutely massive market update that you cannot afford to miss today. Jump up and under, let's get into it, because the global charts are looking like a total madhouse as we approach a historic deadline. Today, we are breaking down the high-stakes news from April 5th to April 7th, focusing on the huge 8 p.m. Tuesday deadline in Iran. We will be covering the massive explosion in oil prices, the record-breaking surge in copper, and why those big tech stocks are looking a bit dusty. Plus, we have a deep dive into the latest gold technical analysis across the 1-hour, 4-hour, and daily charts to find our next move. Just a quick disclaimer for all you traders out there. This video is for entertainment and educational purposes only and is not financial advice. Here is the big question for today. Do you think gold is about to smash through $5,000, or are we going down? Let me know what you reckon in the comments below, and make sure you smash that like button and subscribe to join our legendary crew. We have roughly 48 hours of pure market chaos to unpack, so grab a cold one and settle in because things are getting serious. The eyes of the entire financial world are fixed on the Strait of Hormuz right now, and the pressure is at an absolute boiling point. President Trump just dropped the mother of all ultimatums on his social media platform over the weekend, and it has sent shockwaves through every asset. He has given the leadership in Tehran until Tuesday night at 8 p.m. Eastern Time to reach a deal and fully reopen the strait. He is calling tomorrow Power Plant Day and Bridge Day, and warning that the entire country could face total decimation in just one night. Struth, the man isn't holding back at all, threatening to obliterate every single Iranian bridge and power plant if they do not comply immediately. This heavy rhetoric has sent West Texas Intermediate Crude Oil, or WTI, screaming higher to open Monday at over $112. If those bombs actually start dropping tomorrow night, we could see oil prices hit the stratosphere and blow past all of our previous records. The Crude Oil Volatility Index, also known as the OVX, is sitting at a crazy high level of 93.14 right now. That is pure, unadulterated panic in the energy sector, and it is providing a massive geopolitical floor for the current price of gold bullion. Iran is not showing any signs of budging though, calling the threats delusional and refusing to open the vital waterway for any international shipping. They are even reported to be hitting petrochemical plants in Bahrain, which makes the whole Middle East region look like a literal tinderbox tonight. Right now, tanker traffic through the strategic Strait of Hormuz is down by a staggering 90% compared to before the conflict began recently. Only 15 ships were reported to have snuck through with permission yesterday, which is basically a drop in the bucket for global trade flows. There are rumors of a Pakistan brokered ceasefire that could last 45 days, but those talks are looking pretty shaky as the clock ticks down. Gold traders are caught right in the middle of this mess, trying to figure out if we get a diplomatic deal or a total blowout. If a truce is actually signed, expect gold to pare some of its recent gains, but if it is war, then hold on to your hats. The tension in the air is so thick you could cut it with a knife, especially with the United States military on a high alert. One minute we hear rumors of a peace deal, and the next minute the president is posting about bringing hell to the entire region. This massive uncertainty is exactly why gold is being treated like a lifeline by every big bank and institutional player in the game today. Don't sweat the dip, just more room in the pouch, because these kinds of geopolitical flaws do not break easily during a global crisis. We are seeing a massive flight to safety as the Tuesday night deadline approaches, and everyone is looking for a place to hide their capital. While everyone is staring at the oil charts, Dr. Copper is out here doing absolute backflips and showing us some incredible industrial strength today. Copper prices are pushing through the $6 per pound mark, which is a brand new all-time record for the red metal we track. It has gained nearly 18% over the last 3 months, moving even faster than the yellow metal we all know and love so much. That is telling us that despite the threat of war, there is still an insatiable demand for physical materials to build the new world. The copper to gold ratio is currently sitting near 0.00136, and it is rising fast against the defensive gold play. Usually, a rising ratio like this means the market is feeling risk on, but this time it is being driven by total supply chain chaos globally. You simply cannot have an artificial intelligence revolution or a green energy grid without thousands of miles of high-quality copper wiring for power. This surge is putting a huge amount of pressure on the Australian mining sector, which is currently flat out like a lizard drinking water. If you are holding shares in our local copper miners, you are probably grinning like a shark in a surf carnival right now. Legends. But you must keep an eye on the gold correlation, because they have been moving together at 0.81 over the last year. Let's check in on our local currency, which has been a bit of a roller coaster for us over the weekend. The Aussie dollar is currently hovering around the 0.707 to 0.709 level against the big dollar. It is getting a bit of a boost because our Reserve Bank just hiked interest rates up to a restrictive 4.1%. Our central bank is playing it tough to fight off that sticky inflation that is being caused by the massive global energy shock recently. But the greenback is also incredibly strong because traders are terrified of the war and are running back to the safety of cash. The US dollar index, or DXY, is holding firm above the 100.60 level throughout most of this trading week. It is a classic battle of the hawks, with our local Aussie dollar trying its best to keep its head above the rising tide. If the Iran situation turns into a full-scale kinetic war tomorrow, the US dollar might just steamroll every other currency on the planet. However, the Aussie dollar is still trading at a 3-year high compared to some of our other major trading partners in the region. Watch the 0.68 support level very closely, because if that level breaks, then our local dollar is absolutely cactus, my friends. Looking at the equity markets, the ASX 200 and the S&P 500 are starting to go their separate ways lately. Our local ASX 200 index is currently trading around the 8,579 point level on the daily chart. Meanwhile, the S&P 500 over in the United States is sitting near the 6,593 point mark today. The Yanks are dealing with a heavy sell-off in their big tech names, while our local miners and banks are mostly holding the line. Aussie 10-year government bond yields have now hit 5%, which is the highest level we have seen for our debt since 2011. That is making those fully franked dividends from companies like Westpac look like absolute gold for any income-seeking investor in the market. The S&P 500 is struggling because it is far too heavy on the tech giants that are finally starting to cool down. We are seeing what they call the Great Rotation, where money leaves software apps and flows into real physical infrastructure and energy plays. That is a massive win for Australia, as we are the ones digging the stuff out of the ground that the whole world needs. If the S&P 500 breaks its 200-day moving average soon, it could trigger a massive wave of algorithmic selling across the board. Speaking of tech, the so-called Magnificent 7 stocks are starting to look a bit more like the mediocre 7 to a lot of traders. Nvidia reached a historic $5 trillion valuation in late 2025, but it has since dropped about 15% from those dizzying heights. It is now sitting around the $4.4 trillion mark as the artificial intelligence hype finally starts to meet some hard reality. Investors are realizing that building those massive data centers for AI costs a heap of cold hard cash and takes years of work. Companies like Microsoft and Amazon are also feeling the pinch as their capital expenditure starts to skyrocket to maintain their lead in tech. The Magnificent 7 ETF, with the ticker MAGS, is actually down by over 11% so far in the year 2026. That is a massive shift from the "to the moon" sentiment that we saw all through last year and into the early months. Traders are finally realizing that in a war economy, you need real power and physical metal, not just more apps and digital ads. This rotation is driving a massive amount of volume into the gold sector and gold mining stocks like the GDX and SIL. When the big tech boys start bleeding like this, gold usually becomes the most popular asset at the dance for every institutional fund. Even the legends over on the Wall Street Bets forums are starting to change their tune about the broader equity markets and the tech dip. There is a lot of chatter about the Hormuz squeeze, and people are piling into gold and silver as a legitimate chaos hedge today. Memes about power plant day are everywhere on Reddit, and the sentiment is shifting rapidly from buy the dip to buy the gold. Some traders are genuinely worried that the entire stock market is just a house of cards waiting for one bad headline to fall. The Reddit effect is very real, and it is driving a lot of retail volume into gold mining stocks throughout this trading week. When you see the apes talking about physical bullion and vaults, you know the market vibe is getting pretty serious for everyone involved. They are coordinated, They are loud, and they are definitely not sweating the small pullbacks in price that we have seen recently. It is all about the signal layer now, where social media sentiment can totally override the boring old fundamentals of a balance sheet. If the internet collectively decides that gold is the next big short squeeze play, the move could be absolutely legendary for us all. But remember, traders, volatility is a two-way wrecking ball, so keep your stop losses tight and your eyes wide open for any sudden reversals. Let's talk about the big macro picture and why the US dollar might be starting to lose its grip on the global stage. We are seeing a massive movement called De-dollarization, and it is accelerating because of the sanctions and the war in the Middle East. Central banks are dumping their US treasuries and buying physical gold at a record-breaking pace to protect their national reserves today. Brazil's central bank recently sold $61 billion worth of US bonds to stack more of the yellow metal in their vaults. They are realizing that gold cannot be sanctioned, frozen, or printed out of thin air by a foreign government during a conflict. This is creating a massive structural flaw under the price of gold that has nothing to do with daily speculative trading on apps. For 15 years straight, central banks have been net buyers, effectively removing a huge amount of supply from the open physical market. If this trend continues into the future, the fair value for gold could be way higher than the prices we are seeing today. Some analysts are even whispering about $5,000 or even $10,000 an ounce if the dollar system truly starts to fracture. It is a total monetary redesign that is happening right in front of us, and we are all sitting in the front row. Back home in Australia, the RBA is keeping us all on a very tight leash with the highest rates in the developed world. Our 10-year bond yield is sitting at 4.8% on average, which is a huge hurdle for any other investment. This is making life very tough for mortgage holders, but it is keeping our big four banks very profitable for the time being. In the States, their GDP growth is still around 2.2%, but inflation is starting to hit that scary 4% mark. The Federal Reserve is stuck between a rock and a hard place, unable to cut rates because oil is making everything so expensive. This higher for longer interest rate policy is usually bad for gold, but the current war risk is totally cancelling that out right now. It is a bifurcated market where safe haven demand is pulling gold up while high interest rates are trying to pull it back down. But the fact that gold is holding near all-time highs despite these high rates is incredibly bullish for the long-term trend, legends. It shows that investors are far more afraid of a systemic collapse than they are of missing out on a bit of interest yield. That is a massive signal for all of us long-term holders to stay the course and keep stacking while the room is available. All right, legends, let's get into the meat of the technicals for gold, because the charts are telling a very clear story today. On the 1-hour chart, gold just rebounded from an overnight low of $4,599.70. It is currently stabilizing around the level of $4,666.91 on the spot market. We are seeing a bullish alignment of the short-term moving averages, which shows that the immediate selling pressure might be drying up. Now, check the 4-hour chart, because we just confirmed a MACD golden cross on the morning of April 7th for the traders. The RSI on that 4-hour time frame has climbed up to 55, which means momentum is finally shifting back into the bulls' favor. If we can break and hold above the $4,700 resistance, we could see a massive run back to the moon. However, on the daily chart, we are still trading within a minor descending channel that started back at the March peak of price. The daily RSI is currently at 44.78, which is neutral and shows there is plenty of room to move higher. Our big line in the sand is the 0.618 Fibonacci level at $4,543. As long as we stay above that golden ratio support, the medium-term uptrend for the yellow metal is still alive and well. Resistance is currently stacked at $4,745, then again at $4,980. If the Tuesday night deadline goes kinetic, these resistance levels will likely be smashed like a glass at a rowdy Greek wedding. But if we get a surprise ceasefire, we might see a quick retest of the support at 4,319. To wrap it all up, the next 24 hours are going to be absolutely historic for every single person trading these markets today. We have a massive geopolitical deadline at 8 p.m. Tuesday that could send oil and gold soaring into the stratosphere in seconds. Gold is showing very strong technical support at the critical $4,543 level on the daily chart. Oil is already trading over $112 with volatility through the roof, as shown by the 93-point OVX. Big tech is cooling off while copper and our local industrial metals are hitting all-time highs as the world rotates into hard assets. Central banks are still buying every dip, providing a massive structural floor for the precious metals market that we all love so much. And our local Aussie dollar is fighting hard against a strong greenback as the whole world seeks safety in the face of war. So, what do you think, legends? Will Iran open the strait tonight, or are we heading for a total blowout in the Middle East? Put your price predictions for gold in the comments below, and let's see who the real market gurus are in our community today. Smash that like button if you enjoyed this market update, and subscribe to join the Gold Jumper crew for all the latest moves. Stay active, stay legendary. Catch ya.